A year ago, I covered Thakral on this channel. The stock is up 26%. Today, I want to update you on what has changed and why I think the story is not over. Three numbers to anchor this. Share price today, 1.87 Singapore dollars. Pro forma net asset value per share after the Gurugram acquisition, $2.47. The only analyst covering this stock has a target of $2.56. You are buying below book value and below the analyst's target, with the biggest asset in the portfolio not yet in any valuation model. Quick disclaimer, this is for educational purposes only. I hold a position in Thakral and have shared this idea with clients. Nothing here is financial advice. Do your own research. Here is the core thesis and why it still holds. Thakral owns a 16.8% stake in GemLife, listed on the Australian Stock Exchange. Market value, $279 million. It also owns a 6% stake in the beauty tech group, listed on the London Stock Exchange. Market value, $34 million. Those two stakes alone total $313 million. Thakral's entire market cap is $283 million. So the market is pricing the listed stakes at a discount, and then pricing everything else at negative value. The Japanese commercial properties, the Singapore Riverwalk office, the Gurugram real estate in India, the DJI distribution business across 7 countries, the beauty and fragrance business with 65 stores across Greater China. This is a big discount. Now, to what is new. In May this year, Thakral completed the acquisition of a 95.3% stake in a 21-acre freehold mixed-use development in Gurugram, India. Total consideration, $93.9 million, $50 million cash and $43.9 million in new Thakral shares. The site has 3 components, 7 acres for a hospital. A Tier 1 operator will build and run it. Thakral participates as landowner on a revenue-sharing basis. 11 acres for premium residential. A credible third-party developer builds and sells. Thakral receives a revenue share on sales. 3 acres for a wellness center, developed directly by Thakral and leased to operators. 2 things worth highlighting. The land is freehold, and the hospital lease structure is 30 plus 30 years. That is a 60-year income stream on land Thakral now controls. Now, one more thing before we move on. Thakral paid 93.9 million Singapore dollars for this land. That is what sits on the books, but comparable residential in the same Gurugram corridor is transacting at 320 Singapore dollars per square foot. The site has 2.5 million square feet of development potential. The controlling shareholder took shares instead of full cash. They are betting on what this land becomes, not what it costs. Gurugram is on the books at cost, not at what it can generate. Keep that in mind. This is the question nobody has answered yet. What is the potential value of Gurugram? First, the only analyst covering Thakral is Phillip Capital. Buy rating, $2.56 target. Gurugram sits at book value in their model. No development upside has been attempted. Second, no one has put a number on what a 60-year healthcare annuity plus residential revenue share plus wellness income on freehold land in Gurugram is worth. Third, the contracts are not yet signed. They are still in discussions. Until the agreement is announced, any number would be premature. But the moment it is announced, the market will need to find an answer fast. I am not going to put a number on it today. I do not think that is my job here. The gap exists. Phillip Capital published its most recent note on June 8th. Target price, $2.56 derived from 50% conglomerate discount applied to their sum of parts. Their model includes the lifestyle business, GemLife, beauty tech, and investment properties. Gurugram is in there at book value, $93.9 million acquisition cost. What is not in the model? The hospital revenue share lease, the residential revenue share, the wellness center income. None of it on the freehold land. The $2.56 target is built entirely on existing assets at current market values, with Gurugram treated as a passive investment at cost. If and when the hospital operator agreement is announced with disclosed terms, Phillip will need to revise. Thakral Group, the controlling shareholder, transferred this Gurugram land into the listed entity. They are the seller. They chose to receive Thakral shares at $1.8128 as partial payment, not all cash. If they had no confidence in the stock's potential, they would have demanded more cash. Their stake has gone from 51.37% to 59.1%. Their wealth is more concentrated in this listed entity. That is skin in the game. And one more point. Thakral has rebuilt from a very difficult past. GemLife, Beauty Tech, DJI, all of this took years of disciplined capital allocation. Gurugram is the most significant bet they have made. It cannot be allowed to fail. To add, two external fund managers accumulated a combined 1.89% stake at that same price level. There are risks. First, execution in Indian real estate. Thakral's track record is in distribution and investments. Large-scale real estate development in India is a relatively new territory. The choice of hospital operator and residential developer is critical. Get that wrong and the thesis changes. Second, contract delays. The hospital operator is still in discussions. Until signed, Gurugram is an option, not a contracted income stream. Every quarter without an announcement is a quarter where investor patience is tested. Third, GemLife and Beauty Tech share price movement. Both declined in the first quarter of 2026. If they re-rate further, NAV compresses and the margin of safety narrows. Fourth, dilution. About 24 million new shares were issued for the Gurugram acquisition. If future acquisitions are funded the same way, per share value creation can be eroded even as total assets grow. These risks are manageable, but watch out for them. If you found this useful, like and subscribe. I will be back when there is something worth updating.